Good day, simple traders. Today we are going to be looking at the top-down analysis on some of the charts, some of the coins that were dropped in the group. So, the first coin, let's check the group and see the coins that were dropped that we need to look at. Okay, the first coin here we are going to look at Quick. We are going to look at Bell. We are going to look at Meme. We look at Hyper, Mavia, Hippo, Melania, and Broccoli 714. So let's head back to our chart now. So on this chart, the first one, okay, let's do it in this order that is in here. The first one here is Quick. Okay, the first one here is Quick. So let's look at Quick. This is my chart on Quick. Let me go to daily time frame. Let's identify our daily time frame from possible areas of liquidity. So the first area of liquidity I see on this chart is here. I see an area of liquidity here. I see an area of liquidity here. I see an area of liquidity here. But I can take a support and resistance also from here. So let's draw that on our chart. We define area of liquidity as areas on your chart that you have on field orders. So likely smart money or market makers will likely push price to those areas to invalidate them or mitigate those areas before the market will begin to move to either direction. So those are our areas of interest. Those are our point of interest. We use liquidity areas. So I have identified some liquidity areas on this chart. Now, one thing about liquidity areas is that I mentioned before that once price mitigate a certain liquidity area, that area on the chart is no longer valid. Let's take, for example, this area on the chart was a liquidity. This area was a liquidity. This area was a liquidity. But you can see that price has mitigated these areas on the chart. So they are no longer valid. All these areas that are marking on the chart, they were liquidity areas that has been mitigated. So those areas now are no longer valid. We look for new areas of liquidity. Let's say you leave your point of interest at this level, and you want to take a signal with it. It might be giving you a false signal. It might be giving you a false signal. But if maybe you are doing demand and supply, fine. Demand and supply will work for you. If you are doing like demand and supply, it can work for you. But if you are doing liquidity, once a place has been invalidated or mitigated, you have to look for another area of interest. So now let's mark out our areas of interest here. I point out this place as an area of interest. I also pointed out here. And I'll mark out, there's another area of interest I'm seeing here. So now let's go to the 4 hours time frame. If we will see maybe a certain support and resistance. This is 4 hours time frame. I think our areas of interest are very good, but on the 4 hours time frame you can see a resistance somewhere here. There's a resistance here. So we mark it purple. This is a resistance. So we are already marked out our point of interest. Now what do you do on this point of interest? You have to wait. you have to wait for price to play into your point of interest. You have to wait. When price plays into your point of interest, you can take a trade. You can take a trade. Now, for people that maybe they are not, they don't want to be really patient with this chart and want an early entry, you can place another support and resistance here. You can place another support and resistance here. Then look for a buy from there. Look for opportunities to buy if price retests this place. But if you observe, why I mark this place with purple is because these ones are marked with purple. I consider them weak. This is a weak support and this is a weak resistance. Market can just move all the way and break through this place and continue going. So it is a weak support. But that doesn't mean that when market gets there, we will not react to it. When market, you can see market reach this point. You can see how market has been reacting to it. See, it dropped. It got also here, it dropped. Market will react to them. But I consider them as weak areas of consideration. So what am I waiting for on this chart? I will wait for the price to break to play into my area of support. If price comes to this line, let's say those that have marked out this line early, you are not going to remain on this trade because price can just come down, play into this area and continue going up. So if you are taking this trade now from this point, you look for a close somewhere here. You look to close this price. If you go to maybe 1 hour or 15 minutes time frame, you will see where to close these prices, and you'll close your trade maybe around here. You will see a close here and you see something like this. So let's check 15 minutes time frame. Once you take your entry from an area of weak support or resistance, you don't have to stay long on those trades. You don't have to stay long on it because price can just push. So if you see here, you will see a certain, you will see a resistance up there. You see a resistance here, which can be considered as another area of interest, but it is on a 15-minute chart board. You are not going to consider it. This is an area of interest on a 15-minute chart. So price can come into this area. Price can play into this area and come back. Now, these are the things that you see when you see people draw a chart like this. You can imagine people drawing charts and they will begin to draw something like this. So these are the things that they consider. They already considered all these areas of interest. Now, why would I draw something like this? Because this is a minor resistance. But that doesn't mean that price will not react to it. When price gets there, you will see all those actions, all those reactions too. Price can just get there and play back into our main area of support. And for the fact that, okay, if you see, you will notice that BTC is retracing. BTC. You will see that BTC is retracing. See what BTC is doing. For those that marked out their own area of interest on BTC, you will see how BTC touched this area and is retracing. This is a strong area of, is a very strong area of resistance on BTC. This right here. So you see, this our point of consideration right here is a very strong area of consideration. So for the fact that BTC is retracing from this buy, you can see the engulfing candle here. You can see that that is a sign of retracement, and you see that even when it retraces from there, this was another point of interest. The one below was another point of interest. And when it got there too, it is reacting to it by pushing this green candle up. Is pushing this candle. So if BTC now gets below this this area, if BTC breaks this area, I am first going to expect BTC to come to this area. First, I will expect BTC to come to this area, try to push up a bit, then still come down. It will break. You understand? I will expect something like this on BTC. So if BTC is bearish, I will expect the charts. But though right now BTC is not bearish, so right now BTC is very bullish. We are very bullish on BTC. So we are expecting our quick. So since BTC is bullish, I will also talk on something with you guys. BTC dominance and USDT dominance, how to use them. So BTC is bullish. So we are expecting the entire market to be bullish. So what will you look out for here? You have to look out for buys. But even as you are looking out for buys, you cannot just enter this trade from just anywhere on the chart. You have to allow the price to play out into your point of interest. So that is the analysis on this particular pair. So I am expecting the market to play into our point of interest. Then once you confirm with your candlestick on the 1 hour, you can take a trade. If this thing does not come into your area of interest, please, you can just wait. You just wait. Now, another thing I want to point out to you guys is when you are trading most of all these contracts on Solana, make sure you go and check their market cap. Most of these coins, the market cap is below maybe 20 million, 30 million. They can easily pump, they can easily be manipulated. So if you know the market cap of a coin, you'll be able to tell how much this coin is going to pump and how volatile it can be. Then that will guide you on the leverage and the margin that you will use to enter this coin. Just like quick, like this quick is below 20 million market cap. You don't need to overexpose your account because you can just push one candle. Look at what happened here. You can just push one candle. This candle can be like 20 to 50% in the actual market price. By the time you multiply it by your leverage, it's a very huge movement. So let's say your leverage now is 20x. Let's say your leverage is 20, and this movement, if this movement here is 30%, you multiply your 30% times your leverage. So 30 times 20, how many percent will that give you? That will give you 600%. So that will give you 600%. And if you are, let's say, in the wrong side of the market and you are seeing minus 600% on your account, it's very scary. That is a very bad trade. So always check the market cap. Now, let's say you are even using 5% of your trade to enter this coin. If you are using 5% of your margin, 5% of your margin to enter, that is what will be there now. You are having like, what you are losing in that time will be, what you will be losing will be 5%. What you are losing is 5% times 5 times 600%. And 600% is 6. So only on that trade, that is when you are conservative, so you are losing 5% of your margin. So only this trade now will be making you to lose 5 times 6 is 30% of your entire portfolio. That is when you are using 5% of your entire account with 20x leverage. That is what you will be losing on this. So check the market cap so that you will be guided in the kind of risk that you are taking. So this is my analysis on this quick, and I hope you are going to look at the charts further, and if there's any adjustment or anything you do not understand about my analysis, please let me know. Let me know now. Drop in the comment below so that we can attend to you. So now, if anybody might ask me right now, what is my prediction on this chart? Right now, you can see that the chart is in the middle of nowhere. I cannot just jump on it, even on the 15 minutes time frame. This price has to come to at least a point of concentration, react to something, then I can make a decision. Look at when it came to this line, when it came to this upper line, when it came to this resistance up. When it came to the resistance, you see how it has reacted to it. You see how it has reacted to the resistance, even to the support. See how it reacted to it. That is what I'm waiting for. Either a weak or strong point of interest. I have to wait. It is only when the chart gets to that point that I will make a decision. If I do not see anything like that, I will have to wait and let it go. So if you like this analysis, please share and subscribe. We have also other ones to analyze. See you in our next video.